Good news this week, inflation data, that's PCE, personal consumption expenditures, came in better than expected this week and with lower numbers than the market anticipated, which helped us. And this does show that inflation's cooling, especially as housing costs like rent finally start to reflect in the real-time declines that we've been waiting for and talking about. And even better news is on the way. Starting in January, the year-over-year readings are going to be much more friendly for inflation, which should help us start 2025 well. And with the Fed signaling that they're in no rush to cut rates at their last meeting, at least not aggressively next year, after they cut rates by 25 basis points this week, they hinted that there will be fewer cuts expected next year than there were before. And in other news, unemployment claims went up slightly this week, and personal income and spending both grew at a slower pace. And while people are still spending, the personal savings rate has dropped to its lowest level since 2008. And that just shows that many households are feeling the pinch. As far as what's next year is shaping up to bring some more stability as inflation cools and housing supply improves a bit. But the Fed is keeping an eye on inflation in the job market, so don't expect rates to drop significantly, at least in the short term. And just to sum things up, lower inflation and a steady housing market are giving us, reasons to feel optimistic, at least for next year. But the Fed's cautious tone does mean rates likely won't change that much until spring, although they do follow inflation. Have a Merry Christmas and a Happy Hanukkah, and I'll see you next Friday.